Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After a rocky week, the Australian dollar has now managed to stabilise its recent decline. Following that, it also reached its objective of 65.5 and now finding pretty much a sort of a short-term base here. In light of the pattern, I'm keeping a very close watch on the RSI just in case there is a bit more divergence. Even though it is bearish, the market is attempting to recover. Looking at the resistance, that is seen somewhere around 65.75. In light of the current pullback, the market is seeing probably a mixed direction at the moment. Overall, though, I'm not taking my eye off the downside. That could come in around 64.45, even though the market is attempting to recover. Still, in light of the current challenge, we do have the non-farm payrolls ahead, which views or called into the forecast of around 203,000 jobs added, slightly lower than the former reading of 209,000 jobs in June. And the unemployment rate is expected to remain steady at 3.6%. So all eyes on tonight with the news from the job data and see how or can the numbers improve. If they can, then it might strengthen the US dollar and send the Aussie a little bit lower. The euro also is attempting to recover since reaching its objective. That was around 109.55. Given the fact that the dollar has pulled back slightly from its recent highs of 102.55 and sits around 102.25, I'm keeping a very close watch in how this market performs because there is bullish divergence. And if this divergence can strengthen, it would see the price ignite up towards 110.45 to 55. There, the market might see a bearish ambush. I'm not overly bullish. I'm just seeing how this divergence unfolds. And if the bulls will likely take the challenge to the top side, but likely to struggle beyond or around 110.5. Having taken the challenge to the top side, dollar yen struggled around 143.90.95, and from there has posted an engulfing candle. From this candle doesn't need confirmation. Looking at the previous candles, and I like this one that comes in around 141.65.75. If seen, would ignite a further move down towards the region somewhere of 141 to about 139.5 and reassess from there. But we do need confirmation. Technicals haven't broken down, so I'm not putting too much emphasis on the fact that we could see a breakdown. This candle could be negated and therefore look back towards the top side challenge coming in somewhere around 144 to about 145. It depends though if the dollar can gain strength. So all eyes on the non-farm payrolls and see if it can ignite and move up. As widely expected, the Bank of England did hike rates, but more to the fact of a dovish rate hike that was of 25 basis points. In light of the 25 hike, the benchmark lending rate for the UK is at 5 and 5.25. Still, there was many looking for a 25 basis point hike, but then there was many looking for a 50. After the announcement, the pound stumbled and then found support around 126.20 and now posting a weak hammer. I like the way this market has come back and therefore could see a further rise on towards the region of 127.60 to about 128.20 and reassess from there. If we see a similar response as before from yesterday, then I would say that the bulls are coming back in greater numbers. Having staged 2.5 day negative price action, the market is now finding support close towards that 1,915 to 25 area. I still feel the challenge is there due to the weak technicals, and any advancement should struggle towards 1,947. Reassess from 1,915 as beneath there exposes the region of 1,850. And wrapping up with oil, well, the market staged a very much bullish comeback after breaking the trend, little confirmation and no follow through, and the candle coming back is relatively strong. Although the market for myself is now a little bit to the neutral side as the bulls are not going down without a fight. In light of the pattern, I'm putting a broader range somewhere of 77.70 to 83.5 and likely to struggle in terms of direction due to the weak indicators. Therefore, I do favour another downside move, but I like a little bit more support from the technicals before coming out with that call. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.